Welcome back to Rockstock Channel. It is Wednesday, January 25th. I'm wearing my Piedmont Lithium hat, not the Rockstock Channel hat. We're interviewing Keith Phillips, I don't know, for the third or fourth time. It's been over a year, though. We had your Chief Operating Officer, Patrick, in November. We are an advisor to an investor in Piedmont Lithium for a very long time. You've now been there more than 5 years as the CEO, Keith, but I remember calling you around this time, March of 2017. We were doing a seed funding round for WCP Resources, which has since become Piedmont, and you very kindly wrote a check into that $5 million financing at 9 cents and about a 10 million market value. And then over the course of the next 3 or 4 months, you did what I consider an M&A banker's like due diligence on the lithium space, because you didn't know very much, which included actually going to the Fast Markets Lithium Conference in Quebec. Everyone was laughing about Quebec. People were laughing about North American lithium. Rodney had a comment that people were laughing that material from there might ever end up in a Tesla. And you just started the year signing that agreement. But I want to focus this interview on you as a deal maker, but also as a company builder, because when I called you, you were a banker, and it's been quite a journey, but it really still is just kind of beginning. Just tell us a little bit about this journey. Rodney and I visited North Carolina in November together and met a whole bunch of your staff in Belmont. I separately went to Quebec to see the Sayona, in progress with a whole bunch of sell side and buy side, analysts. I think that was in November. The company is very significant. If you could just summarize the journey from 2017 to here in terms of deals and in terms of people building the individual, components of value at Piedmont.
Sure. Well, thank you, Howard and Rodney. Always good to be with you guys. Very much appreciate your support over the years. You're right. You called me when I was sitting on my sofa in Florida in February 2017. And you tried to persuade me to take a hard look at the lithium industry. And I was at the time very skeptical. I'm now very bullish. That bullishness has developed over the last 6 years. So I joined Piedmont July 2017. I was the first employee. There were a couple founders, Tazo Arima and Lamont Leatherman, who you know well. We built a team. We now have 46 people. We'll probably have 70, 75 on the payroll by the end of the year. And we started in North Carolina. As some of your viewers will know, all the lithium in the world essentially came from North Carolina from the 1950s to the 1980s. There's a prolific mineral belt there called the Carolina Tin Spodumene Belt. We're the biggest landowner on that belt now. We have a big mineral resource. We'll ultimately build a big integrated lithium spodumene concentrate to lithium hydroxide business there. We're very excited about that. Along the journey, as we started to spend time with customers, big car companies, big battery companies, and cathode companies, we increasingly heard that Carolina seemed interesting. The more scale we could build as a company, the more interested they would be in us. These car companies and battery companies are investing tens of billions of dollars in electrification. They need a lot of lithium. A single plant in North Carolina would be nice, but somebody who could be a bigger factor would be more important to them. So around the same time, we were having discussions with people like Sayona about bringing spodumene concentrate into the US. And a light bulb went off, and it dawned on us that being just a converter to produce more lithium chemicals in the US was interesting, but really with so much of the economic value in the mine and in the mineral resource, we could be an investor in world-class mineral resources in different parts of the world and bring those into North America, into the North American hydroxide market. We could develop more scale and create more value. We made a really astute investment in Sayona about 24 months ago now. We bought 19.9% of Sayona Mining. We bought 25% of their Abitibi region project, all for $12 million US. That was just really a fortunate deal from our perspective. Good for them as well. Positioned both of us jointly to acquire North American Lithium out of receivership later that year. And then we made a similar investment in Atlantic Lithium alongside a offtake for 50% of their project in Ghana, which we're really excited about. We're in an industry where there's been some consolidation. The Chinese have picked off some assets here or there, but there aren't really many companies in the public market that have been consolidating. And we sort of see ourselves in that vein. We have the great advantage of being an American company based in Belmont, North Carolina, what we think will be the fastest growing electric vehicle and lithium business geography in the world, with the benefits of wonderful support from the federal government and other governments. Everyone around the world is trying to get into this market. We're based here. We're housed here. It's a big advantage. And we think we can build a real enterprise from this location.
That's great. I mean, Tesla put you on the map Battery Day, September 2020, a deal was announced. Your stock went from, I don't know, $6 to $60. There was one day it traded, $2 billion. And that was like a very significant moment. You did this deal in January of 2021. So just a couple of months after that, you raised some money. I forget exactly at what price. I think $50 million, like right after that. You raised a bit more money at $70 in March of 2021. But before you did that, I think it was January, you made this investment in Sayona at 0.0092. Okay, so less than a penny, right? The stock's at 24 cents. So it really, like, nobody cared about Sayona. Sayona had plans to buy North American Lithium, but the time that you invested in them, that was no guarantee. So could you talk through a little bit like what happened from that time to investment to the time you actually won and helped Sayona win North American Lithium, which only took place, I think, 9 months later, because that is the key new supply that's coming imminently.
Yeah, so the background to the Sayona relationship is interesting. It started with the relationship I had with James Brown, who's a director of Sayona, former CEO of Altura. James put me in touch with Brett Lynch, the CEO of Sayona. Sayona's core business at the time was a project called OTA in the Abitibi region of Quebec near Val-d'Or. Great location, close to rail, the best located asset other than our own in North Carolina to bring material into the US for the battery business. So we developed a nice dialogue with Brett and team around offtake, where Piedmont would bring spodumene concentrate from Quebec into the US. And that discussion evolved. And as it evolved, Brett let me know what his vision was for Sayona in Quebec, which was pretty impressive. He had a vision that Quebec would be a major player in the spodumene business. I think everyone agrees with that. The opportunity was lacking a consolidator. He saw an opportunity for Sayona with the right capitalization and partnership to be that consolidator. He needed capital. Sayona's market cap was 20 million Australian. There was an opportunity to buy the most advanced lithium project in North America, which was right down the road. It was mired in receivership, which was the North American Lithium plant, had been operated a couple times previously, built at the cost of $400 million 7 or 8 years earlier, and really ready for somebody to come in, fix it up, improve it, and get it ready for the market. And that was a competitive process. Sayona, with a 20 million market cap, wasn't really in a position to compete effectively financially. We had the benefit of the wind at our back with that earlier Tesla offtake agreement. We had $1 billion market cap. We had some cash in our balance sheets from some fundings that we had done. So we were in a position to help fund money into Sayona and to partner with them to help become a stronger bidder in the NAL process. It all worked out very well. We acquired, again, 19.9% of the company and 25% of the Abitibi belt, essentially OTA, for $12 million US. We then teamed up in August 2020 and acquired North American Lithium out of bankruptcy at a price that was, some viewed at the time as steep. Lithium prices were just starting to rise. I mean, today, obviously, we're deeply in the money. Not that we would ever sell that asset. It's a great asset. It's a big asset. It's the best located lithium asset, we think, in all of Canada. It's the most advanced by far in North America. It's going to be, production should start in the next several weeks, a couple months. And we think it'll be kind of a mainstay in the lithium business for the next couple decades in North America.
Okay, I want to go to your slide deck from November on page 12. You have the elements of value here and show your various project interests, but the graph you have here on the impact of your Sayona offtake agreement from an EBITDA perspective.
Yeah, it's a good offtake agreement. When they signed the agreement, the idea was we were going to fund money into Sayona. We were going to become a customer for essentially half the material from OTA and whatever else they built in that region. So we do have an agreement where Piedmont will buy as the biggest customer, the greater of 113,000 tons a year of spodumene concentrate, or 50% of production. It's a life of mine deal. And we'll pay market subject to a floor of 500 and a ceiling of 900. So today we'd be buying it for 900 and on selling it to someone, or when our Tennessee plant's up and running, we'll be buying it at 900, bringing some of that into Tennessee. I guess it's not inconceivable the price might one day be below 500 a ton and we'd be suffering that floor. I think that's some time away, if ever, given demand for lithium. But yeah, it's a deal that's turned out to be very favorable. In many respects, it looks a little bit like a mineral stream, like you'd see a Wheaton Precious Metals or one of the royalty companies do. That has great value. The chart's intended to show if we were to realize a price of 900, 1900, 2900, et cetera, how much cash flow would we generate in simple terms from the offtake agreement versus how much we generate as a 25% of the holder in the JV. The offtake agreement's worth a lot. We do have an agreement with Tesla to sell approximately half of our share of that material starting later this year. We're talking to others about offtake for the rest of the material. I know the team at Sayona is talking to some folks about the joint venture material and offtake for that. So we'd love to have all the material for NAL kind of committed by the end of March with blue chip parties in the industry.
I have the spodumene concentrate price being largely flattish and then tapering off till the end of the decade and being just above $2,000 a ton. And my NPV on the offtake arrangement alone was about 1.8 billion US dollars. So substantially higher than the market cap now purely for the offtake. Given Albemarle's recent presentation, I guess one could argue that $2,000 a ton is too low in 2030 and onwards. That's the number. And I guess that's why I felt if North American Lithium can execute on bringing a product to market, and Keith, that was a question I had for you, is what is expected to be the standard product that's produced in terms of grade and impurities out of NAL?
Yeah, we haven't disclosed that. It'll certainly be a market acceptable product, but I think we feel good about A, the ramp there, B, the product quality, C, the ultimate nameplate capacity, which I think in the pre-feasibility study was 168,000 tons a year. I expect it'll be higher than that. I expect some work done on the mineral resource. We think the mineral resource looks better and better going forward, frankly. And there's not a customer in the world that's looked at the material that hasn't said they want it, at least that we've spoken to. So we feel really good about that. Some of the big, smart, long-only investors are saying, Keith, these are great projects. We want you to build them. But if you wait an extra quarter or two, you generate an extra 100 or 200 or 300 million of cash flow from Quebec, it'll make the funding that much more efficient. And I think that's something we're thinking hard about now.
Definitely. Yeah, look, spodumene software, you look at Pilbara's, cash flow generation, it was $1 billion, I think, in the most recent quarter. So absolutely. Could you talk about the carbonate thought process at Sayona Quebec? Because a lot of Sayona shareholders, you're talking here just about, spodumene and the offtake is great, but they're very interested to, move downstream as soon as possible. So, and I noticed your offtake with Tesla is kind of 2.5 years with a potential to extend it, but that potential to extend also depends on whether or not you're integrating the carbonate. Yeah. So just help us understand the thought process from Piedmont's perspective on, will Sayona and Piedmont, be vertically integrated in a few years?
Yeah, listen, when we went into Quebec, we went with a very strong view that we want to one day produce lithium hydroxide in Quebec, lithium chemicals in Quebec. But we obviously, as you know, Howard, have a real focus on hydroxide. The NAL facility comes with a sort of partially built, partially completed carbonate refinery, which, obviously we looked at when we bought it. We didn't attribute really at the time any value to it. It's sort of an opportunity, but there was no value attributed to it. We really were investing in the ore body and investing in the concentrate facility. We're working with Sayona on a pre-feasibility study to kind of rebuild and restart that carbonate refinery. That pre-feasibility study, I think, is due in March, say March, April. Hatch is working on that. They have a lot of expertise in the area, and a lot of familiarity with that plant. So we're working hard on it. We're looking hard at it. I will also make the point, there's a lot of other spodumene in Quebec, including within Sayona with their Moblan asset potentially, certainly Nemaska, James Bay, Critical Elements, Patriot, Winsome, lots of folks looking for resources. I think you'll see Quebec be a big spodumene producer in the 2030s. Most of the projects will take that long, and ultimately a big hydroxide producer. We're definitely going to be part of that. We're very committed to that.
That's great color. Australia no longer dominates the trade in PLL stock, but you've seen a lot of Australian spodumene stories, re-rate. And I think there's some maybe not full understanding of what's happening. I mean, you're imminent producer. I mean, the Pierre Lassonde chart that shows like stocks re-rate as they're moving into production. You've seen that in Sayona stock. You've seen that in Sigma stock. And you have a chart actually here. I'm going to put this up, valuation consideration, where you compare yourself to Sayona, to Core, Liontown, LAC, Sigma. But I think there's a thought that, you're just going to be producing spodumene for 2 years, 3 years. So you can't really value that spodumene stream as that economic value because you'll suddenly just make a decision to produce carbonate. The disproportionality between Sayona and yourself on that offtake agreement will just like magically go away. It doesn't sound like it's an if. not a when on the carbonate. And if you don't know, you may as well just analyze you as a spodumene producer, at least for 4 years, is what you were describing.
So 2 points. Let me talk about Australia, and let me talk about how I think people might think about value for Piedmont. So first of all, we are listed in Australia. We were originally an Australian company because our core asset at the time is in the US. Our team is American. We decided to redomicile to become an American company. We've kept our listing in Australia. We always will. Australia is a really important mining market. It's a particularly important spodumene market. At the margin, the average investor in Australia has been thinking about spodumene a lot longer than the average investor in New York or Boston. So they're very knowledgeable. They have a lot of companies to look at. And I'm really excited. I used to go 4 times a year. I haven't been since COVID, so I'm overdue. That valuation page was really intended to address, people ask me all the time, Keith, why do you think your stock is so cheap? And I'm like, well, thank you for recognizing that I think our stock is cheap, because I think the valuation doesn't make a lot of sense. So in that deck, I've got a couple pages. I start by introducing the concept of enterprise value. So that's, as you know, Howard, that's your market cap basically plus your debt or minus your net cash, whatever. What's the net value the market's attributing to your enterprise, to your business you own? Okay, so in our case, it's $700 or $800 million. And in other cases, and you mentioned some of them, Core, Sayona, Liontown, a few U.S. listed companies, the numbers are considerably larger. And then what do you get for that 6 or 7 or 800 million? Well, you get the Sayona investments, the Atlantic investments, 100% of Tennessee, 100% of Carolina. And on top of that, you have this offtake agreement, which Rodney thinks is worth $1.8 billion. So if you add all that up, it's a lot bigger than 6 or 7 or 800 billion. So it's a frustration for me. I think with respect to how to value, the offtake agreement, I think what I would say is this: listen, we want to go downstream in Quebec. We're working on going downstream in Quebec. We'll see how that all develops. That there's not a decision there for at least a couple of years. And I think what I'm focused on right now is making sure that asset gets up and running, making sure we can make some good deliveries to good customers under our offtake agreement, generate some cash flow, which I think will drive our shareholder value, but also drive our cash balance to allow us to do the other things we want to do. And in due course, we'll all figure out what might happen in terms of going downstream.
We were just checking the stock. We're approaching $70. So since the beginning of the year, the stock's performed well. But in March of 2021, which was still near the bottom of lithium prices, your stock price was $70 and you raised $123 million. A year later, March 2022, you raised another $131 million at $65. So actually a slight down round. Are you planning to raise any capital in the near term? And what's your cash balance? And there's so many companies in spodumene in particular that have hit all-time highs and broke through higher highs. Why are our viewers able to buy your stock at the same price as 2 years ago when you're on the cusp of producing and have 3 other assets that are for free?
That is the $64,000 question. It is frustrating that our stock hit the 80s, I believe, 2 years ago when lithium prices are up 6 or 8 or 10x from that point. We've added 2 fantastic assets, 3 including Tennessee. I think our enterprise is dramatically more valuable than it was then, but that's what makes the market, and it provides an opportunity for people. So the short answer to your question is we don't have any plans to raise capital. We're fortunate that we did the financings you talked about. So we raised about 120 million net in March 2021, about 120 million net in March 2022. We used some of that money for the investments in Sayona and Atlantic and North American Lithium. And then we've been advancing our projects. But until we build a project, we don't have much in the way of external funding requirements. We will, at some point, be spending real money to build Tennessee. We'll be spending real money to build Ghana. We'll be spending real money to build Carolina. But until that happens, and the range of funding options available for us for those is really exciting. So we do have a $142 million grant we were awarded from the Department of Energy in Washington, and we have an opportunity to tap other interesting capital markets. So one of our friendly competitors, the group at Ioneer, just announced a $700 million ATVM loan for their project in Nevada. Congratulations to them. We have applications in for Carolina and Tennessee, which would together exceed $1 billion. We're very optimistic we'll be recipients of ATVM loans as well. So we're really lucky. We have exciting projects in front of us, but between the cash we have now, the cash flow we expect from Quebec, the grant and ATVM loans, and maybe some prepayments from some customers, I think it's possible.
Okay, that's very helpful. And you touched on some points I want to get to. So you're applying for ATVM loans. That's from the Loan Programs Office. That's what Jigger Shah controls. but you received a grant, which is essentially free money of $142 million, also from the Department of Energy. And Albemarle also received a grant for their Kings Mountain to concentrate spodumene, not for the mining, but for the actual concentrating of the spodumene. They received a grant. So could you talk about, just from a U.S. government funding point of view, this is independent of the tax incentives through the tax code, which you're going to have great benefits from, but how could you get both a loan and a grant for Tennessee? I thought they were either or.
Well, listen, the U.S. government is all in, and there's really bipartisan support for the idea that relying on China for our future energy sources, essentially batteries and the materials that go into batteries, is just not a good idea. And the current administration has been very aggressive in advancing some policies that are really pro-U.S. battery material development. So with the bipartisan infrastructure law, there was $7.5 billion set aside to grant funds to projects that were worthy. Tennessee Lithium Project was a recipient. Separately, the ATVM, the Advanced Technology Vehicle Manufacturing Loan Program, has been in place for well over a decade, but there'll be a lot of money there. And there's money with the Defense Production Act. There's opportunities everywhere. The tax credits are very significant. On the one hand, they're going to drive EV demand by extending and making more relevant the tax credit for a purchaser of an EV, you or me, or some other American consumer. So that'll help drive demand for EVs. Not that we really need that help right now, but as the industry grows and more people convert to EVs, making them that much more economical is a good thing. Certainly it's going to drive lithium demand. And then the advanced production tax credit, provision 45X, is a 10% of our production cost tax credit for the life of the project in Tennessee. That's very significant.
Could you walk through the math of that 10% tax credit as far as you understand? Because as I see it, that there's a whole host of things that are aimed at leveling the playing field vis-a-vis China, right? Because China government supports a lot through various types of activity, and this seems to be matching that, right? One is to give you free money, one is to loan you money, which needs to be repaid, and then thirdly, this is just something, it's a tax rebate that fundamentally should lower your operating costs. I mean, people think it's more expensive to operate in America than in China. What's the math of that tax credit as far as you've ascertained so far?
Here's the way I would characterize the credits. So it's one thing for the government to grant money or loan money and use capital for their ends. I think it's worthy. We're very proud to be a recipient of the grant. We're eager applicant for loans and will be. And I think that's important. The credit is very different. It doesn't cost the government anything unless we go spend $1.6 billion to build Tennessee and Carolina, employ 600 or 700 people between the two of them, have those individuals and the service businesses around us pay lots and lots of taxes. If all that happens and we're profitable and we have a tax liability, there'll be a credit against that tax liability. I think it's a really clever way for the government to incentivize development. It's not entirely clear how it'll work yet for us, but we expect, taking it at face value, that we would get 10% of our production costs as a credit against taxes otherwise payable.
Okay, Rodney, you want to dig into Atlantic and Tennessee and how you modeled it as well?
I think it's fair to say the Atlantic modeling is a work in progress because there seems to be so much scope to grow that resource. Your thoughts on where the mineral resource estimate, can that just be a gift that keeps on giving?
Well, listen, it's a massive land package. It's a mineral-rich country. So my guess is Atlantic, that entity that controls that, will be making discoveries in Ghana for years and years and decades to come, perhaps. So I think it's a wonderful resource. It's really well located, as you know, relative to infrastructure, including a major port, power. So we're very excited. The real question will be, with the resource that will grow and could grow further, is there potential for throughput increases? And
so that was my very next question. That at some point in time, if the mineral resource estimate grows materially, would one look to increase throughput and production given how tight the market is?
Yeah, I know the Atlantic team is working on the DFS. So the plan is to release an updated mineral resource estimate in February or March, a DFS mid-year. I'm sure they're looking at scenarios. I know they're looking at different scenarios for different throughput amounts. I'm with you. I mean, on the one hand, longer life is better for a lot of reasons. On the other hand, we're in a market where I think we're going to have a really, really fantastic decade in the lithium market. We're sort of currently at around 10% EV penetration globally. very few people were projecting that we'd get to 10% in 2022. Most people thought that'd be 2025. People are now talking about 20% in 2025 and 50 or 70 or 80 in 2030, 35. But between now and then, it's going to be very exciting. And maximizing production between now and then seems to make sense to me. We're committing a lot of capital to these projects, and you really want to maximize net present value.
You're building a multiple asset company. Lithium Americas is a multiple asset company, although they're splitting off, into two. You also said when we started, you thought that this would be so obvious for Albemarle and Livent that like you would build, Carolina to a certain stage, and then maybe there would be, some sort of competition or bidding war, between those two majors. North Carolina is now very much in their sights. They're talking about a mega flex site of 100,000 tons of hydroxide. They seem very much to be following you and Piedmont a little bit, but the vision of 5 years ago or 6 years ago that this would happen, the battery plants would come, the cathode plants would come, and then Albemarle would redo Kings Mountain. It's all happening. The question, I guess, within this is your team. You said you're now 40 people. Rodney and I had an opportunity to sit down with Chris McVeigh and Monique Parker and Aaron Sanders. You have some new board members, and you also announced those two new hires in Tennessee. So just as a former banker who's built successful banking teams internally, you have now come from hiring a couple of outsourced consultants to building a real company here. If anyone has claimed to be the next lithium major, certainly focused on the United States, servicing the United States, it's Piedmont.
Well, so thanks for all that. So listen, whether we're ever a lithium major or not, we're very focused on building a business that will be resilient and will be profitable and will drive value for shareholders. And we like our strategy, as I think Howard, our strategy is we want to be one of the, if not the biggest producers of lithium hydroxide in North America, all from spodumene concentrate that we own. We want to capture all those economics. We've had that strategy for some time. Others like Albemarle have other businesses and obviously world-class assets in other parts of the world that they've been focused on. So for them to have been focused on that for the last several years, I think makes sense. The world's changed. The US is now the fastest growing EV market. It's going to be a very big market. You're going to see a lot of EV production, battery production, cathode production here. There won't ever be enough lithium production here. So anyone who can do it is going to be in a really favored position. So we're excited about our position. I'm sure they're excited about theirs, Livent and others who kind of may advance. But fundamentally, it's all about the people and the team and being able to execute. And we started with really 1 or 2 employees 5.5 years ago when I joined. We're now 45 or 6. We'll have 65 or 70. We're building the requisite teams that you need to function as an American company, the proper finance and internal controls and reporting staff, legal staff, et cetera. But we're also very much building the technical team. And that is one of the biggest challenges in this industry. It's going to take decades to build a lithium industry with real broad talent around the world. It's going to take years and years to get teams right at individual companies. There's nowhere in the world better to do it than North Carolina. Nowhere in the English-speaking world, at least. Lithium had its origins in North Carolina. There are dozens and dozens of experienced people who either work at Albemarle or Livent or used to, who know this business, whether they worked in North Carolina or Australia or Chile or Argentina. We're building the team. We hired Nick Fouché as our Senior VP Projects. He's really in place to drive these projects forward and make them happen. We're in the market now for somebody to run our chemicals operations. We hope to have an appointment here in the next several weeks. And we're building out teams on the mining side, chemical plant side, construction operations, and we have a couple dozen strong, really high quality technical people now. We're building a real capability that'll just grow day by day, week by week, month by month. And that's something we can export. That's something, if someone's going to build conversion capacity in Quebec, right now, the only people doing that are an American company, Livent. We could be one of those companies doing that as well in Quebec, because otherwise it's going to be hard to do. They don't have a history of producing lithium chemicals up there. They don't have as big a chemical industry up there. So building the team and assembling the team is critical.
There's numerous data points that we're seeing, certainly on the contract side from various guys in the market that have all huddled around $6,000 a ton for spodumene concentrate. And I guess just wanted to get your sense of, maybe how long you think that price level can hold.
It's interesting. I'm very interested in the perspectives of different people on the lithium price outlook. I think as a general matter, there are highly informed individuals like you two of you and Rodney, the work you do on supply demand, I think is very thoughtful. I think the work Matt Fernley does in London is very thoughtful. I think some of the work Joe Lowry does is very thoughtful. Benchmark Minerals would folks like that who are spending all their time focused on this space, as a general matter, I think they have a better view on what's actually going to happen over the next several years than people who are on the sell side in big investment banks who are busy doing a lot of other things. You know, they're often covering gold companies or chemical companies or oil and gas companies. They don't have time to really dig in asset by asset and build supply demand models. So they're bright people, they're at great institutions, but as a general matter, they don't have the time to invest. And I think the quality of the work sometimes shows, and it varies greatly. I've never seen a commodity, if you want to call lithium a commodity, where there's a bigger divergence of opinion as to where prices might be next year, like in 2024. I think the investors who have been looking at the business for a long time see this as a real opportunity. I think others for whom this is a new high growth, fast area they need to learn about, it's just hard to develop confidence. I think that'll change. I'm in the Albemarle camp based on what they put out a day or two ago, where it's not necessarily they're projecting the prices will stay flat. They're assuming prices will stay flat for the next several years. I think that's a reasonable, safe assumption. I could make an argument for why prices should go up. Just about every supply demand model shows bigger deficits in 5 years than today. If that's the case, prices should be higher, not lower. That's just simple economics. I'm always mystified when I see sell side analysts with 2030 projections of huge deficits, but prices returning to historical norms. That can't happen. Those two things both can't happen at the same time. So time will tell, but I think I give Albemarle credit for the way they approached it, that they're assuming prices will stay at these levels. Again, the supply demand problem is going to get bigger and bigger. It'll solve itself eventually, but I think eventually is the 2040s. It's not 2025 or 6 or 7. I think it's the 2040s, because the discoveries you're reading about today, the exciting drill holes in Quebec or over here or over there, those assets will not be producing in 2025 or 6. They're just not going to happen. Inconceivable. So they're going to be, in most cases, at least a decade away. Just going through the permitting process, going through all the processes they'll have to go through, the engineering, the geology, the metallurgy, et cetera. Just getting the funding. It will take a long time, and that'll be the big constraint on this business. EV demand is way ahead of what almost anyone projected. Every EV needs a battery. Every battery needs lithium. Lithium supply is going to struggle to keep up for the next at least 10 years, in my view, and probably longer.
Yeah, I mean, it was an interesting one because Albemarle has as good a seat at the table as anyone in terms of interacting with the largest battery and OEMs. So they should have a fantastic idea of where demand is going. So it's odd that you have analysts at odds with that when the biggest company in the world is telling you what their customers are telling them. But
I think, Rodney, I think it'll take care of itself this year. If Albemarle is right and prices sort of stabilize around these levels, which in fairness, can provide great profitability for existing producers, but you need really strong prices to incentivize, not to incentivize some CEO to go try to build a plant, but to incentivize a funding source to fund it. You really need a good, because there's execution risk, as on the mining side, on the downstream side. And you need a really strong pricing environment if you're a lender to make these deals work if things struggle. And I'm bullish. For sake of argument, I have my own little trend line of prices that looks a little bit like yours for analytical purposes, but I actually think it's conservative for the next 4 or 5
yeah,
or
look,
6
I mean, it's again, my price chart is hope over experience, because by 2030 you have time to fund and permit and get things into production, I guess, that aren't down now. We'll have to see. But a case in point, Mineral Resources just came out with its second quarter of their financial year, which is June, and delays on Mount Marion, which is an operating asset that they were going to expand, and now that's fallen behind. So, I mean, a perfect example of something. Wodgina looks to be fine and on track, and I think that's something people need to take very close notice of, because that can ramp. But
listen, Wodgina will ramp, Mount Marion will ramp, but Mount Marion delayed, Sal de Vida delayed, James Bay delayed, Sigma and Core are 6 or more months behind their what they were saying 6 months ago. That's just going to be a steady drip. You're gonna hear that on most projects over the next several years. I don't think many of the new discoveries today are producing in 2030, by the way. I don't think that's going to happen. So the Mount Marion ramp up will happen, Greenbushes will happen, Pilbara will max out, Wodgina will max out for sure. That won't be enough. There may be parts of the world where things can happen more quickly. We'll see, but that won't be enough. I agree. But by the 2040s, it'll happen. And there'll be a lot more discoveries made in the next several years. There'll be big discoveries in Quebec and Ontario. Who knows? Maybe the US, Africa. There'll be more in Australia.
I think, Keith, you might have touched on a very important point. Been hearing, some drum banging and what have you about, if the future's liquidity picking up, but there's 476 open interest contracts. That's 476 tons in open interest on the CME. So before everyone says this thing's going to be commoditized, they need to just get a perspective here on what that represents of annual volume. But I think, your point is, with funders, you don't have the ability to hedge yet. That's going to be difficult. So really what people want is to know what they're working with. What is the number going to be? If you said, fine, lithium will be 50 or 60,000, whatever a ton, people would say, okay, and start to plan around that or sort of do it. But, everyone wants to second guess it. And I find it odd, and it's leading into a question whether you have detailed discussions with OEMs, because the reality is the reports that I'm seeing is their profitability and their ability to exist is at threat with lithium prices much above $60,000 a ton, in which case, why aren't you doing anything about it?
Yeah, I'm not smart enough to know what the longer term looks like. I think in the shorter term, the bigger problem for the car companies isn't lithium prices, it's ramping their own production. Ford could sell just about as many F-150 Lightnings as they can make. They'll soon, I presume, make a lot more. And I don't think those buyers are generally that price sensitive. At some point, that'll change. I think you'll see efficiencies in the EV production process for sure. My impression is that Tesla is a lot lower cost producer of an EV than their competitors. They're very competitive today. I think all the car companies will become very competitive relative to ICE cars, internal combustion cars, sort of in due course in the next year or two or three. Tesla's just kind of ahead of the curve. But so I really don't think the demand destruction issue is a big issue for the next several years. It could have ultimately be if it's really a question of feeding the kind of smaller vehicle market and less expensive vehicle market. And there are a couple different solutions. The other thing I'd say is I think, fleet buyers, if you're buying a fleet of buses or taxi cabs or garbage trucks, it's pretty easy to do the total cost of ownership analysis. And the benefit of EVs is so dramatic from a TCO perspective. I've had my Tesla 4.5 years. My maintenance budget has been $56 total. That's a cabin air filter and a tire rotation. That's all I've ever had to do. There are no oil changes, none of this, none of that. I probably saved $1,000 or $2,000 a year on fuel, just massive savings. And again, that car costs less to buy than the equivalent internal combustion car. So the economics are massively favorable. Higher lithium prices don't change that. They impact it, but they don't change the ultimate end game, I don't think. And I think the reality is, we can wish away high lithium prices, but unless all the car companies buy all the lithium mines, then you're going to have a market of lithium producers who are going to sell to whoever doesn't own one, and they're going to sell at, I think, pretty high prices for some time.
I don't think anybody on this call is wishing away high lithium prices. We have bet our career positioning investment-wise on the stronger for longer. I do not believe that these very, very high prices are at all priced into Piedmont stock. They might be priced into some other stocks on our scoreboard, but the point you made, we've made it as well. There's a very wide disparity of views, and that creates volatility, and it creates a lot of fun, opportunities. Look at RK Equity scoreboard. There's 100 companies there, and, hiding in plain vanilla sight, PLL, right? Rodney thinks could be worth, 180, 190 bucks. That's a triple from here. That would make you a $3 billion company. That would only put you on 6 times EBITDA, in 2024, based on just 100,000 tons times $6,000 a ton spodumene, and you're buying it for $900. Prices are higher. You've got to deliver that, but that's certainly de-risked, permitted in construction, very much kind of in sight. So again, not financial advice. This is probably my biggest, personal position in Piedmont. It has been for some time. We are an advisor to the company, but
and Howard, just I appreciate those comments. Just to amplify, I think as we think about the value of our Quebec investment, which we're very excited about and we think has great value, we think our Atlantic investment is at least equivalent value. Within Quebec, we're going to get 113,000 tons a year. Out of Ghana, we'll pay $900 for that. In Ghana, we'll get more tons at a lower cost. So it'll probably come a year or two behind in terms of the timeline, but that's another massive generator of economic value, I think. And between the two of them, if you imagine us getting 113,000 tons in Quebec, 127.5 in Ghana at an average cost of $500 or $600, that's a very valuable business. And we certainly wouldn't at 3 billion, we certainly would be a lot lower than 6 times EBITDA of that. And then we built
that's closer to $1 billion, I think. We had it.
Yeah, it would be $1 billion of EBITDA, and Rodney rightly in his analysis, and the note we'll put this up on, which is on our website. That's the most simple way to do it. Just North American Lithium and Atlantic, potentially $1 billion of EBITDA. The reason I'm focusing so much on the North American Lithium is because, as you said, the market is somewhat not fully understanding because you're complicated to model, because you have multiple projects, and historically it was all about Carolina. But in part, the purpose of this video and other marketing, you're about to have 36 meetings and everyone in Australia. This is very much a keep it simple, stupid spodumene, even before you get into the qualifying hydroxide and all the money that you need to put into, those plants. Just in Atlantic and just in, North American Lithium, you have very de-risked, advanced projects that are well understood by Australian investors in particular, who have seen many spodumene success stories. And so with that, we're banging the drum on Piedmont. That was the title of, our last video. I don't want to work. I just want to bang on the drum all day. And I'm confident we'll see these higher highs, the higher low of $88, in the not too distant future. Your stock is touching, $70 today. So we'll see what happens. Every day is different. Someone could knock you back $10 or $20. This just happened 2 months ago. It's great volatility. You do have options, and put and call options are available on Piedmont stock in the same way that they're available on LAC stock. You as a fully listed U.S. company, you're also in the Russell 3000, I think even the 2000 index. So the trading dynamic in Piedmont stock is a bit different than some other stocks because of being fully American domiciled. You're in different types of indexes, not just ETF, lithium or battery ETFs, et cetera. But anyway, thank you very much for this very detailed insight into all of that is Piedmont. It's been more than a year since we've had you on, and look forward to the upcoming catalyst to realize appropriate value.
Really appreciate the time, appreciate the support over time. And from our perspective, 2023 is all about execution. We're hoping things go well and shareholders can benefit.